Stocks are higher. You've got the dollar also really higher. Yields are probably the story of the day. This does make me a bit nervous, right? Yields this high signals that people think the Fed's gonna not cut rates as much, possibly because of concerns about government spending. Bitcoin is up. I am long Bitcoin, so I'm having a good trading day in the sense that a lot of the risk-on positions that I took in the recent weeks are looking pretty solid. I'm long the Nasdaq. I'm long Bitcoin, and both of these things are doing quite well today. What's not doing well today is gold, and the thing is, it's a very sensitive topic, the election in general. But we discussed this from the last two election scenarios or examples that we had of both Biden and Trump when they got elected. In both scenarios, we saw a common pattern. Gold before the election went up, and following the election decision, gold dropped. Now, we talked about that at length yesterday during the stream, and in recent weeks. This has been something that that we've talked about for a number of weeks. Is the election uncertainty has been a bullish catalyst for gold, but once you get the election decision out, whether it was Kamala Harris or Donald Trump, because again, when Biden got elected, we saw gold prices drop. So gold dropping here today was a very, in my opinion, and I say this, as somebody who has been mostly bullish this year, something that we very much called on this stream over and over. Now, I'm the first one to say that I'm not always right about the markets, and I certainly did not make the claim that I thought, the election would go one way or the other. I was very unsure of who was going to win. However, the market was also unsure, and that's why gold prices were up. Now that there has been a pretty clear winner here, gold is dropping, right? Because gold is now saying, okay, that uncertainty is now gone. Now, I'm not saying there's not uncertainty with Donald Trump. There definitely is uncertainty with Donald Trump in certain ways. One of the big ways that I see is the interest rate situation, right? But there's some nuances here, right? Because interest rates are likely, yields are jumping here today because maybe some people are worried about, well, okay, if we're going to be now seeing a Trump administration, what does that mean for inflation, right? I've said this all along, whether it was Harris or Trump, spending is likely to be strong, like high, right? Lots of government spending. That puts a little bit of a floor, in my personal opinion, on where we go with inflation. Again, that's not a, singular only Donald Trump or Kamala Harris, but we have to pivot. As traders, our goal here is to trade the markets. And what we now have in front of us is, okay, we're doing this Trump thing again. And I traded during that time. I'm curious, for many of you guys, type yes or no really quick. Were you trading during Trump's last administration, 2016 to 2020? Let me know in the chat. Are you guys, have you done this once before, or is this new to you? Type yes or no whether you traded during the previous Trump administration. I did, and I can tell you that it was an interesting time. Go back in time to take a look at what was happening during the previous Trump administration. We can start to carve out what maybe we see some similarities of this time around. So during Trump's previous administration, the stock market went up, and so did it under the Biden campaign. So I'm not saying that that's... We've established this. This chart will tell you pretty much everything you need to know, okay?
This was our best year yet at A1 Trading. In 2024, we brought the incredible Chris Pulver in and gave you guys access to all of his trades and analysis through Pulver Alerts. We also introduced our newest market scanner, the Stock Box, whose AI algorithm is scanning each and every day to provide you with bullish or bearish biases on the top stocks and stock sectors from around the world. Not only that, but the Stock Box gives you a behind-the-scene look at what the largest hedge funds in the world are buying and selling through the 13F scanner, so you can keep up with what people like Warren Buffett or Steve Cohen are adding to their portfolio. The best part of all, both of these products are on sale now for a massive 40% off during our Black Friday sale event. The Stock Box, the Edge Finder, Pulver Alerts, and the VIP Discord community, as well as our trading view indicators, are all on sale for 40% off. This is the absolute best discount of the year, hands down. So if you want to take your trading to the next level, don't miss out on the 40% off Black Friday sale event. You can find out more with the link being dropped in the chat now. Again, 40% won't last forever, so take advantage of this huge sale. Stockbox, Edge Finder, Pulver Alerts, VIP Discord community, and Trading View Indicators, 40% off right now.
The president does not have a huge say on how much the stock market goes up and down, right? We can get that out of the way. That being said, the market does seem to be cheering the Trump victory here. Perhaps it's more just the decisive victory one way or the other. If it was Kamala Harris, market would probably also have gone up strongly, in my personal opinion. So look, Democratic president, Republican president, doesn't really matter. What is a little bit of an interesting caveat is it's looking like we're going to get this scenario, specifically a Republican president and a Republican Congress, which is a thing. It is something that when it comes to power division, the market actually likes power division. Like it likes when, for example, you get a divided Congress and a Republican president, or a Democratic president and a divided Congress. Like those are the scenarios that we've seen historically speaking are the best times. That being said, a red president, red Congress historically also seems to do pretty well, all things considered. That being said, where are we at? Well, stocks are higher here today. They are much higher today, up 2% for the S&P 500. And, you know, what this is kind of telling you is that some of the pro-business stuff that, generally speaking, the Republican Party leans towards may be causing some up moves in the stock market. But I do want to just reiterate that I said this from the beginning. If it had been Harris today and a blue wave, for example, I think that the reaction would have been similar, because I think it's just people saying, okay, great. Now we know what we're dealing with and we can move on with our lives, right? The stock market, business, corporate America probably just wants to see, okay, are we going to, you know, see a decisive winner, in which case we can now move forward and move past this election thing? Or are we going to get stuck in this limbo period of not knowing who the president's going to be? And, you know, that's why we're seeing the moves that we're seeing. Gold down 3% today is because we have a decisive win, right? A decisive win is less concerning for markets, not because it was Donald Trump, not because it was, you know, Kamala Harris. It is simply the idea that, okay, we have a winner. Fine, let's move past and let's go forward. If there was not a clear winner, gold would have been up today, in my personal opinion, right? If there was a real escalation, if things were uncertain about, you know, last night, it would be different. Following election periods, oftentimes the premium that was in the price of gold, because people were scared, right, comes out. Now that, you know, and it's not a Trump or Biden or Clinton thing. It's not who the president is, simply the unknowing and then the realization, right? So when Biden was elected, gold prices fell following. When Trump was elected last time, gold prices dropped following. It's simply all the pent up uncertainty before. Once there's a resolution, people then kind of reset and they, they go out of, safety stuff. I'm very curious too. Yesterday we looked at the put call ratio. Look at what is happening here, guys. My goodness. The put call ratio did almost exactly what we thought it would do. The put call ratio skyrocketed and has now started to come back. This was people buying insurance ahead of the election, uncertain of what could happen. And now this is the same reason, by the way, why I think gold is down today, 3%. Election uncertainties went crazy. Everybody got really scared. And then once there was a resolution, and I think it would have been the same for Harris, you had a reversal of that uncertainty. And now people are like, okay, we can deal with this, right? I think that is not about who is the president. I think that is simply just a pattern that is recognizable surrounding the last few elections. Gold prices go up before, they fall on the news. The better question is now gold ready for some buy entries? And for me, the answer would be not yet. I'm a little cautious because look at the dollar. Look at the dollar. The dollar is skyrocketing higher. I think we need to hear from the Fed. I think we need to see some more economic data. Right now, it's too mixed for me to really get too bearish on the dollar. In fact, the Edge Finder has me leaning bullish on things like dollar yen, dollar CAD, right? Dollar strength could be here to stay, at least in my opinion, unless you hear some big change or reversal from the Fed tomorrow. Dollar strength may be sticking around for a little bit. When I look at things like dollar yen, which screamed higher yesterday, my goodness, I'm looking for possible breaks and retests on this chart. I like this chart a lot. Breaks, retests, continuations. Dollar CAD, similar story, right? Big move up. Let's see if we can break through those highs and continue. Just a no shortage of volatility here, guys. Everything is moving very violently today. I would say just exercise caution, be careful, and if the emotional swings of all this is too much, it is more than okay to just stay on the sidelines and stay relaxed. Current positions for me, I am long Bitcoin, semiconductors, real estate. Look at this. Real estate did not do as much as well, here's why. Look at this. Here's a trade that completely reversed for me because of the increased inflation concerns. I had a long position on real estate, which was doing quite well, has now come all the way back to about break even. So real estate, I'm long the Qs as well, which is the NASDAQ. I'm long NVIDIA, Airbnb, and I have several options positions as well. I have some bullish positions on Tesla, which are going well. However, I sold a call at 290. I might get called away from my shares if Tesla keeps going up, which would be fine. I'll basically take profits on that. Look at the way price held this. I talked about this on our stocks Telegram. By the way, you can join our free stocks Telegram if you want. We can drop the link here in the chat to that. I shared this chart. Big gap up, right? Price kept going, came back and retested the gap open spot, and then shot through the moon here today to the upside.
Where it's lower taxes coming in probably. Some tariffs coming in for China, for Europe, for Canada potentially. So yeah. New policies, and I don't know about if it does, but if we do the full sweep House, Presidency, and the Senate, we're gonna have a lot more laws being changed.
Yeah, which is a nerve-wracking thing for not just for everybody, right? As you just mentioned, Europe, UK. We've seen what's happened with the Brexit scenario, which has been difficult to say the least for the UK, right? You change those trade rules, and there's some question marks there. I think it's fair to say you look at the yields being up the way they are today. Bond market is also thinking there may be some inflationary stuff coming. That being said, it's not all doom and gloom. You got stock market making new highs here. Do you think this changes the story here for the Fed with yields? I mean, clearly there's some inflation concerns. What are your thoughts on the Fed, which we know is ultimately very important to this overall story?
I think it changes the picture upside down because I think we're gonna have more inflation now.
Yeah, and
well, he has said, but that's a bit of a funny story. If he takes out Powell, I don't think he will, but if he does, that might be fun. AKA removing him. But with the proposed kind of shift that he wants to, it should be inflationary, and that's what the market has priced in, and what the market is likely to continue pricing in going forward.
Yeah, I mean, that's the thing is, number one, I hope he doesn't take out Jerome Powell. I feel like he's done a pretty good job overall. I've been vocal about that. Some people like him, some people dislike him. As always, he is a political figure, but I feel like from a perspective of his job as head of the Federal Reserve, I think he's done a decent job. That being said, I do think that this adds a flavor to the inflationary story. I mean, things for inflation have been improving, but I'm not saying necessarily that tariffs are certainly going to cause massive inflation or not. I'm just saying that the bond market here clearly thinks it could, and that's an increased risk. So, I mean, when you think about bond investors are selling their bonds because they're saying the yield is no longer, worth the risk over here. That's the way to read that. For viewers, I know, Ivan, you know that, but I'm just saying in general for listeners, when you have yields skyrocketing, it's because people are saying we need more yield in order to bind the bonds, because inflation might erode some of our return on investment. What does this mean for yen pairs, Ivan? I mean, look at dollar yen, pound yen, my goodness. Well, not all of them are up, but dollar yen. What are your thoughts here?
160.
Okay, you think 160? Wow, so almost back to the highs.
Was it not clear? We're going above the highs. No, I'm quite serious. Dollar yen has a lot of legs now. We're going back to being those two economies being potentially divergent expectation-wise, where expectation for Japan is still weak or still not doing anything to it. America now may be reducing its rate cuts, having more inflation. It has now become in my world, the bullish case with dollar strength, which I'm expecting to come in, trickling over the next few weeks. 160 is definitely on the cards. I don't know if yen is going to be the weakest against dollar per se, but I just want to put everyone to not bed and rest and everything, but when it comes to what has happened today, I've seen a couple of people say, "Oh, what's up to gold? I hope for a green day today or tomorrow, whatever." Respect the direction the market has done.
Yep.
I'm sorry. This is experience. It's 10 years and it's probably bad, but my experience tells me whatever direction we have made now, because we have a result, this is gonna tank. This is gonna go lower. So a dollar yen going higher, euro dollar going lower, stock going higher, gold is going to tank. I'm sorry. And if this makes a higher high and above 2748, it's a miracle. And I had a chat yesterday with a chap of mine, and I didn't know this, or I didn't think about it, but one of the reasons for why central banks have been buying gold was a hedge for tariffs or whatever America would do, and now they don't need that hedge anymore. So they are reducing their hedge.
Interesting.
Because I thought gold would go higher on Trump having higher inflation. So
yeah, that's interesting. I mean, I hadn't really thought about it that way in terms of the reduced hedge concept. I do think that, with gold, and we should reiterate that nothing is certain. I know Ivan is he's being dramatic as Ivan is, but I do generally agree with you. I think direction here has now been sort of selected until something really changes, and maybe that's the Fed meeting. I think that's the one thing you have to be careful about is, if the Fed is very insistent on rate cuts, regardless of the scenario, then gold could have, a bounce. But I do think that, as you mentioned, Ivan, experience-wise, most of the time here, when you get these ginormous regime changes or big change, the new direction oftentimes is the new direction for a while. I know that when another example I can give here is back in 2020. When you had the Fed step up and really go crazy with their plans for stimulus, Let me actually see where we can find that. I mean, it was right near the bottom of 2020. When you had the 2020 Fed stepped up and they were like, inflation is transitory and we are going to print. I mean, that was the market bottom. Like one of these big green candles was literally the day that the Fed came out and just said, we're going to reduce rates. We're going to print like crazy. I mean, they didn't say it that way, but that was what the market heard. And as you just mentioned, it turned the market on a dime, and the new direction became the new direction for a suspended period of time. So, I do think that maybe dollar strength is not going anywhere. Inflation concerns may come back, which could trigger the dollar yen rally once more that we saw in 2022. We'll see. I do think that, stock market was kind of trending down the previous few days and then resumed course here. And another one that I'm actually long on, Ivan, is Bitcoin. I think.
Oh, wow.
Bitcoin. I don't know. We might see a bit of a run up in Bitcoin. And if I'm wrong, I've got my stop loss trailed pretty tight. It's already started to reverse. I might get taken out. I'll just take that small profit and move on. But I think Bitcoin might have some upside to it.
Pretty wild stuff, yeah. So big gaps to the upside on the S&P. We gapped up almost 2%, like 1.6 on the NASDAQ, 2% or so on the Dow, and about 6% on the Russell. So as soon as we had opening bell, I spent most of my morning closing out positions on IWM. I'm gonna have to go through the Pulver Alert section and close out some winners. Basically, all my profit targets that I had. So I had a bunch of trades on SPY, a bunch of trades on Qs. It was a combination of credit spreads and debit spreads, and I had 10 for 10 winners. There's still a couple out there, but basically I've just been stacking in some orders consistently. I had a nice chunk of winners that the broker took care of everything. I just set my profit target on the Russell or the IWM. This actually was a pretty good chunk right here. So P&L, fresh highs on the portfolio today, which is pretty nice. I went to the IWM, checked out all my positions. I still have some shares of the IWM. They're covered at 225. That'll be out to the end of the year. But on the overall position on the IWM, around $24,805 of profit, and I protected most of that today. So I still have some shares, and they're covered. But you can see all these things are zeroed out. I zeroed out a lot of my trades for profit. So I had trades that I, 40 cents credit, and I closed it out for 5 cents debit. I had some ratio spreads. I had some other trades, dollar credit, closed it out for 20 cents debit. So anywhere between like 80, 85, 90% of the max profit, I just went ahead and closed it today. The one that I'm probably the most happy with is it was a bull call combo. So I did basically an out of the money spread where I bought the 240. I bought the 240 call. I bought the 245 call. And I sold the 270 against that. Now I paid around, let me see what I paid on my spreadsheet. I think I paid like $6 or $7 for it. Let me find it here. Let's see here. I paid $7.50 and I closed it out today for about 13 bucks. So let's see. So $13 minus the $7.50. 13 minus 750. So that's a 73% return on capital on the IWM. Those trades are done and over with and closed, and I don't need price to go up above 240 or 245 or go to the moon. I turned, a 750 debit into a $13 credit. So pretty happy with that overall. And yeah, I mean, we're had this huge run on the IWM, right back up near, not to them, not quite there, but right back up near the all-time highs. So I do have to wonder, is this capable of running higher, or are we coming all the way back to these levels and say, okay, there's a monster gap now, and if we end up hitting this high and then fading there, something wouldn't surprise me to see this thing going, back down for a gap fill. So just saying, we'll see what happens, but that is a big move right in there. I mean, 5+% from yesterday's close to today's current price. We opened slightly higher, so we're still showing a red candle just barely on the day, but we gapped up like 5.6%. So SPY big gap higher to all-time highs. NASDAQ is coming within the all-time highs. And the Dow also gapped higher to all-time highs. So obviously I'm as curious as anybody. Is there more to this? Is this a gap in a, just a big island here that just hangs out and then more upside? Or is this a gap higher and the Trump trade is essentially put in and priced in right away, and then the rest of it is like, well, not so good? I don't know. I don't think it is a bad thing for the market to price in, maybe some type of optimism, but to do it all in one day, I'm as curious as everybody else to see how this plays out. So I do have a couple of inexpensive trades running for the day. I've got a butterfly spread on the SPY at 585. That's my pin price. So I put that into the pulver alerts as well. If price comes back down to 585, I'm going to set a chart alarm here. 585. If that level gets hit today, I put in a 15-cent debit. I'm trying to close it out for $1. If I get it, great. If I don't, no big deal. But overall, no complaints. It was just a very active management day right away from the first, hour of trading. And I'll let price continue to do its thing. So I do have shares of Intel, looking to get it called away in 2 or 3 weeks at $24. China did not have a great night. So if I take a look at my China positions, overall HSI, still in this sideways chop. Alibaba gapped lower, but it is coming back up, so that's at least a little reassuring. Baidu, same thing, gapped lower, starting to fill the gap. FXI, KWeb, so at least they're showing green on the day. JD came down to 37, and we're back up to 38.79. I'm trying to get this called away at $40. OXY was trading in the 50s. Now it's at 51.57. I've got a covered call for this Friday at $53. So if there's a way that OXI can rip a little bit higher, needs to go up another $1.44. And if it can get up there, here is my position. So have some shares. It's the 500 share one that I'm trying to get called away at 53. So I have a long put that was out for protection out to next Friday. I've got the $53 covered call for this Friday. If we can get an additional rally up here by another $1.42, possibly that gets called away. Pfizer's another one that I'll be watching. JD's another one I'll be watching. So when those sell calls expire, either they get called away or they don't, and I'll just keep working the cost basis lower. But all in all, pretty good. I mean, it was a kind of a wild night. I think it wasn't as dramatic as I thought it was going to be. So I mean, here's the results: 277 to 224. When I went to sleep last night, I think Trump was sitting in the 260s. So it wasn't quite determined, but from what I saw this morning, it looks like Wisconsin was officially in, giving him the win, and 10 electoral votes at stake, and I think that put him over the edge. So some are still, in the works, but crossing that 270 mark is all it takes. So we'll see. I guess all that's left is there has to be a concession speech and a victory speech, and maybe that's it. So, like I said, smooth transition of power would be a good thing. Hopefully not a bunch of drama there. But that's it. We've got a lot of good trades running. If you've been long in any capacity, things are looking pretty darn good. Gaps higher, great. The Russell's caught up in a big way. Let's just talk performance for a moment. So go to Russell and take a look at this start of the year. Okay, I think this just catapulted the Russell up into some territory now where it's looking a lot more attractive from the open of the year. So we started out on the Russell, underperforming, not at all-time highs, and this would have been, looks like right in here would be the start of the week. So from that open, we had about a 6% drawdown in the IWM, but we got all the way back up here. Now it's up to 18.6% or so, 18.5%. So you got your S&P up over 20%. You have your NASDAQ over 20%. You got the Russell now that's played catch up in a big way, up over 18% now. Is it possible to go higher? Of course. It can get up there into the 20s as well. The Dow, right up there in the high teens. So index is doing pretty well. Bitcoin poked all-time highs last night. Gold is dropping like crazy, as is silver. So I saw Alvin and Nick talking about it earlier. But look, I mean, gold pulling back is excellent. Okay. I look at it this way. I'm not trying to catch a falling knife. The dollar's had a big move to the upside. If I go to my typical dollar, look, I think that the dollar gets faded, but I'm not calling this top. That'd be insane. You know, so I look at it this way. We have major resistance. We have major resistance. If this is a big pop in the dollar and it pauses, okay, does it break and refill, or does it continue to go higher? You know, I mean, look, I'm still interested in shorting the dollar 106.50 to 107.00 if we start to see some indecision at these previous resistance levels. So you look left on the chart, go back to these previous highs back in 2022, again in 2023, slightly lower highs in May of 2024. I mean, one thing that's pretty easy to see about this daily candle so far is that that's not a usual daily candle. That's a huge move on the dollar. And this is why I said I don't want to take any dollar positions. Okay, so right there, you know, having some noise, it was not the spot to call the top on the dollar. So if this is a squeeze where, you know, all these traders that are trying to short the dollar get squeezed out, and then it ends up forming, the topping pattern is right here. If we have this low and this market fades it all the way back down, then I'm looking at a topping pattern. You know, so we could have a crown or head and shoulders pattern forming on the dollar. It's just starting to form. If it goes up and pauses and goes up more and pauses, that's fine. Draw an aggressive trend line like that, wait for price to get sideways, and then sell it over here with a stop loss higher and have a big reward to risk to the downside. So I still think the dollar will offer up good trades. More trades closing for profit on the Qs. Good. So I need to update this. This is now 17 for 17 on waterfall. Nice. So I had a whole stack of trades, like I said, first thing this morning. I had a whole stack of trades on the SPY and the QQQs that all hit my profit targets this morning. I was actually in a live session, and I don't think anybody could hear my alerts, but they were going off like crazy. So anyway, it's not a bad thing. Profit targets are good. Okay, so dollar is up. But I'll be watching the dollar.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.